Good morning, and thank you for joining the first in our segment in our COVID-19 and the Economy webinar series. As you can see, healthcare is at the forefront of everybody's minds these days, underscored by the coronavirus pandemic. We're here together today to discuss how COVID-19 will redraw China's healthcare investment and galvanise public and private investment into the sector. We'll pinpoint during the next hour the technological breakthroughs that have the power to revolutionise how we look after ourselves, from artificial intelligence to medical robots. We are honoured to have here to discuss these topics John Woods, Chief Investment Officer at Asia Pacific at Credit Suisse, and Yang Liu, Chairwoman and Chief Investment Officer at Hong Kong headquarters Atlantis Investment Management, and Dr. Min-Xuan Yang, Partner and Managing Director at private equity fund 3H Health Investment. And I am your moderator, Alison Tudor-Ackroyd, Finance Editor at the SCMP. Before we jump into the panel, I'd like to give a thank you to our sponsor for this webinar series, Credit Suisse. Please ready your questions for our experts at the end of the discussion. So let's kick off with what shortfalls has the coronavirus pandemic exposed in the China healthcare system?
I think it's a good question because Wuhan itself was regarded as actually quite advanced in terms of its medical infrastructure versus other major cities around China. And there was a comment and speculation in the domestic media that had the virus happened in a less well endowed city from a medical infrastructure perspective, the fallout could have been substantially worse. I mean, to put some numbers behind that, the average number of hospital beds per 1,000 in China is around 4. In the G7 average, it is 5. And actually in Wuhan, it's closer to 8. So it really was and is a well-balanced and provisioned city. And of course, the rapid reaction by the local government and the national government in terms of the lockdown, the mass testing, the ability to socially track those infected using big data and surveillance technology, I think successfully contained the outbreak. And I wonder if those various features would be available in the West, or if there were, whether they'd be able to be used.
Dr. Wang, please may I ask your view. Why are China's hospitals so overcrowded, and what strains does that put on the system?
I think the main reason is primary care system. In China, the primary care system is inefficiency, and with the doctors unqualified, so the people go to the hospitals for their light illness, or so class 3 hospitals are overcrowded, and many doctors are overloaded with their outpatient practice.
May I turn to you? I understand that you're nowadays taking a much more top-down approach, and you're tracking the changes in healthcare policy very closely. What's your view of what's happening now in the short term and long term?
Sure. It's so obviously now the media shifted from China focus, from made in China to healthy China now, giving this a big event. And also I learned for the first time in history, Chinese government is outspending the US in terms of R&D. This number is a very big, and such like a US dollar 500 billion versus 490 billion.
Wow.
So that means our government is becoming a really big government in terms of healthcare spending.
Yes.
Yes. So over the next few years, we learned that health is a new wealth. Therefore, public health is a new national wealth. And the government comes to appreciate more in health as to the national resources or economic allocation. And also, healthcare expenditure definitely will go up more than ever in China. If we believe the GDP growth is going down by whatever all the experts and the consensus for this year, there was estimated expenditure in the healthcare for total GDP accounted for something like 6.6% to 6.9% in 2020 this year. Probably will go up as much as doubled in 5 years' time. So this is a big government effort, or called government big event or effort to build up the whole public health system. We cannot ignore that. And the one thing we also have to appreciate post the pandemic is the private health insurance definitely will go up. Now we expected it will be doubled at least in 5 years' time from the 7% last year. That's the nearest the number we gathered. This is the PHI will double in 5 years' time. So this new predicted growth, it's really reflected a government target of increase over the next 5 years, supported by a more accommodating regulatory environment and the tax incentive. So this is all we're going to see in the coming 5 years.
Thank you. Thank you. Dr. Wang, turning back to you, and do you expect a more supportive regulatory environment for new therapies going forward?
Yes, I think the Chinese government make great effort to improve their regulatory system to accelerate the new drugs or new therapies to be approved. For example, the first thing they do is to accelerate the review timelines for the new products, and second was to adopt some new schemes. For example, a fast track approval scheme or the local study waiver scheme to some of the drugs which have the significant clinical benefits. So with these policies, I think if a product has a true or has an effective way to address some clinical problems, they can discuss, the developer or the manufacturer can discuss with the CFDA to apply this kind of fast track, or they can have some discussions with CFDA or the markets to do some emergency use of their product, and during the practice they can collect more safety data to get full approved.
Perfect. Thank you. Thank you. Turning to technology right now, how can the amazing technological advances that we've seen across China help support and supplement the public healthcare system? Which technologies are you really excited about now? What do you see as revolutionary out there? Would you like to take that one?
Okay. I think digital health is I think a very important technology to change the whole dynamics of healthcare. Well, the good thing is its ability to collect the data from so many patients, and it can analyze and process this data, and this result can be used to accelerate the drug discovery, can do early disease diagnosis, or can also help the management team to improve the whole healthcare management system.
Thank you. Would you like to add
Sure.
to that?
I guess the data technology, the data system, and the innovations will be the key driver for the future's public health system to support the government to prevention of those future diseases, especially this coronavirus. I guess going forward, all kinds of technologies will be all put into developing all the new drugs and the new solutions. And Chinese government has been spending so much in terms of renovations in the past many years. Then who will be the running fast between the government? We are different governments now have the big competition in terms of how to encourage the technology used for the human, public health.
Yes.
That's why I guess going forward is we all now, all the public eyes, we all now focusing on vaccine, right? So who will be the first one to create and to produce this vaccine for this coronavirus will be the one could be win the Nobel Awards, I guess.
It would deserve it, yes.
Yeah.
John, turning back to you, long-term policy in China. What can China do? What should China focus on in terms of its investment in improving its healthcare system?
Well, we've heard about substantial investment in the healthcare system, which is timely. I think if this crisis has highlighted anything, it's the meaningful gap in the quality and equipment between, for example, the healthcare system in the US, between China and the developed world.
Yes.
As a consequence, our research suggests and highlights 5 areas that needs to be addressed. The first, more broadly, is the public health system. It needs to be expanded. It needs to be increased. There needs to be substantial investment in that, simply to more broadly socialize the provision of public health to the population. In particular, ICU beds. In China, there are 4 ICU beds per 100,000 population.
Not enough.
In G7, there are 17. So there's a substantial room for further investment. And of course, we're hearing here about where these opportunity investments lie and where we can focus on. Equipment, medical devices, therapeutic devices, all these require investment and R&D. And this is, again, an area that we believe will be accelerated in the coming years as a consequence of the crisis. China needs more doctors. The G7 average has half as many doctors as China. And China, of course, has a vast population. So there will need to be some secular investments in the broad education and provision of medical education to the population, which will take some years to manifest, but that's an area of important focus. And we've heard of some of the innovative applications of health technology, health tech, including online medical services, impacting diagnosis, impacting actual interaction with doctors. And this is another area that we think will accelerate in the coming years ahead.
Thank you. Min-Xuan, if I can turn back to you, the big question on everybody's mind, when do you think we will see a vaccine for the COVID-19 disease, that Nobel Prize winner that Yang suggested?
Yes, I think vaccine is a very useful tools to fight against the coronavirus. And now there are 2 companies. They are, I think, leading players in these areas. The first one is Casino Bio. It's a Chinese vaccine company who is developing the vaccines, and this product candidate is under the phase 2 clinical trial in China, and is going to open the clinical trial site in Canada, I think, next month. So this is the first one, and the second one is Moderna. This is a U.S. biotech company who is developing its mRNA vaccines. Yesterday, it announced a very positive result for its phase 1 clinical trial, and they are going to enter in phase 2 trials, or I think this will be a pivotal trial in July. I think the first batch of the medical use vaccines will go to the market, but this only is for the primary population. That means healthcare workers. I think in the autumn of this year, and they should scale up their manufacturing. So I think in public we can have this vaccine, I think, in early next year.
Early next year. Great.
Yeah, but it depends on how manufacturing goes on. I mean, because we have a large population. I mean, needs this kind of the vaccines. So we need to scale up the capacity first.
Got it. John, turning back to you, as we all know, China's population is aging. What support? What is the aging population not getting now? What does it need? And what investment themes can you see with this big trend in the economy?
Well, actually, not only China's population is aging, but actually it's a global phenomena as well. But I have to say, it is more acute, if you will, in Asia than anywhere else. Just to put some figures against that, we anticipate that the segment of those in the population above the age of 60 will double in the next 30 years to 2 billion people, which is a very sizable proportion of the population. Now, as a general observation, we see that those above the age of 60 typically account for 80% of the healthcare resources. Aging populations tend to suffer from a range of diseases such as Alzheimer's, such as cancer, heart disease, etc., and have an inordinate draw on existing healthcare resources. So clearly there's a need for a substantial amount of investment in therapeutics. Broadly, therapeutics and medical devices we see as a pretty critical investment area for China and actually at the global level as well. China's health insurance and indeed pension infrastructure I think is insufficient and inadequate for the aging dynamic which is playing out now, and I think substantial amount of investment will have to be made in that space. And indeed another area that we're looking at is this intersection and confluence between aging and infrastructure, which clearly is a function of urbanization. And indeed we see more and more developers now actually offering healthcare and care facilities in developments, which we think is pretty consistent with the aging dynamic in China. So I would expect to see more and more of that type of investment manifest in the coming years. And finally, let's not forget that the aging population tends to be reasonably wealthy, tends to have quite a powerful influence on consumer choices, and as such I think we can anticipate more consumer choices being offered to this part of the population, including gaming, including travel, including a whole range of health-related and pet-related applications as well. Indeed, we're seeing the pet and pet grooming industry increase substantially as aged populations start purchasing this for companionship purposes.
Would you like to come in on this topic?
Sure. I add a little bit on the vaccine. There are about 90 vaccine being developed worldwide.
Wow.
And there are about 9 vaccine candidates into the trial, series second phase trial in China. There is a company I may add to the doctor, it's called CanSino. CanSino. It's already into the human trial. So I guess very soon, in just a month's time, Even next year will be month's time. And there must be a vaccine real producer and creator coming to the market between China and the United States.
Good news.
So we're waiting for that. But because the COVID-19 has been changing our lifestyle, the way of thinking, and the risk appetite for everything forever, I guess the government, the two big government, G2 now, China and United States, they are thinking in different ways how to protect their population and how to for the build up a more comprehensive and supportive public health system. So your question coming to the investment theme, isn't it?
Yes.
I think the investment theme already very, very clear. If you have been investing in the market in the past 5 years, it's all about the two things. It's healthcare and the high tech.
Yes.
It's nothing else really. And also in the first 4 months, China's healthcare sector has been significant, outperformed the rest of the world. It has been increasing by double-digit returns for the first 4 months, and more or less now. So there are quite a few leading companies. They are coming out from China. And interesting enough, in terms of the coverage of China healthcare and the medical giant names in the public market, and we see very pathetic percentage now, including in the MSCI China Free Index, also in the MSCI Global Universe indices. So if you think government expenditure will be doubled in the next 5 years, for sure now, maybe more. And if you believe that public health insurance will be doubled in the coming 5 years, we talk about now the 14th 5 years plan very soon, from 20 to 25 to 20. This is the 5 years. Well, the investment themes become so obvious that all the high tech company, all the human resources and government effort expenditures are pointing to the healthcare industry. So you must have overweighting the healthcare sector. Otherwise, you are so likely to be underperforming.
Good
and
advice.
So the 5% now only for the healthcare companies are counted for 5% only in the MSCI China Free Index. I think it will be probably very likely to go to 20%. So and also in terms of the healthcare names from China, and there are so many of them now in the world-class names. So there's a must overweight sector for the coming 5 years.
Thank you. Good advice. Turning to a subsector that really fascinates me, on telemedicine, that really seems to have been gathered momentum and sparked consumer awareness during the coronavirus pandemic. A lot of adoption at these companies. What do you see as the prospects for this sector, Min-Chuan?
Well, I think has a very good prospectus in these sectors. Is because using this new technology, we can figure out some problems we have in the primary care market, and also we can improve the efficiency of the whole healthcare system. You see, we can have some emerging leading players in these areas. For example, Ali Health or Ping An Healthcare or Dingshan Doctors. I think they are at current stage they are leading players at these sectors, and they during the pandemic. I think they have done a lot of work. It used to be done by the public health system, but in the emergency, I mean, they have the opportunity to leverage their techniques to help the people and help the society. So I think in the future they have a bright future, and with application of this kind of artificial intelligence, and this can help the government and also the health practitioners to to improve their efficiency and can deliver, the service. I mean, high quality service to the public.
So public and private working together.
Are working together
to cover so much demand.
Yes. Yes.
Thank you. We've talked a lot about the growth opportunity and the technological innovation in the sector, but I think we'd be remiss if we didn't cover some of the risks that investors face. I mean, this is still an emerging economy, and policy is evolving. I mean, John, for investors, what do they need to be aware of when approaching this sector?
Well, I think we have two experts here that can give us a much better sense of investing on the ground. But I mean, I think the private sector is probably more robust, particularly in its allocation of capital. Capital is scarce among SMEs and private companies in China, and one can reasonably assume that if they do have capital, they are allocating it efficiently and ultimately profitably. Where money is essentially free, of course, one does get a distorted allocation of capital, and that's absolutely the case with the SOEs. One can take the argument that if you throw enough money at a problem, it will eventually resolve, and some sort of target will eventually be reached. But as we know from the story of investment in China in the SOE spaces, profitability rates can be low on global comparable levels. So I would actually be focusing my attention a lot more at the private sector. I think there's a lot of innovation in that space. I think there's a lot of talent as well. And that's where I think I would be directing and advising clients to focus on.
Thank you, thank you. Would you like to take that question about the risks? Yeah.
I would like to put the risk on the more broader base. I guess the geopolitical issue has created new risks for all investments nowadays.
The US-China trade.
You may name them. Therefore, I think the risk is become very now clearly than ever post-pandemic. I guess the people and between countries will become isolated. So therefore, the human behaviors for the futures business activities will be changing so dramatically, and the pandemic is reshaping our lifestyle, I would think. So the risks now is how you have mindset going forward when you come to investment field. So it's really you have to take top-down approach rather than bottom-up. That's the approach I've been promoting in the last 5 or 10 years. Since I saw, the G2 countries become so different nowadays than ever. So the top-down approach means you have to look at post-pandemic, what sectors, what industries are more like to be followed and supported by the government and the regulatory environment, rather than you purely calculate your valuation, PE's ratio, whatsoever. Those very fundamental driving factors no longer working well when you come to investments for your future protection of your capitals. So therefore, from the top-down approach, we are more or less overweighting, and we have to look at those few areas or industries or sectors. The number one definitely is life science and healthcare. Number two is we more focus on militaries and high tech in terms of in these areas. Okay.
Thank you.
Number three probably is the new digital solution and online platforms, which we all discuss here. And it's become phenomenal investment themes. There are not many unicorns coming yet compared to e-commerce or internet players. They were so big and so phenomenal and a lot of investors made a fortune in the past 5 years. But going forward, I think the digital world, the online platform and activities will become the big issue for everyone to look into them. Now, they are not cheap now, but more to come. I also learned China Health Commission has actively announced some new rules to support the digital solution and online platform and the innovative events and money supportive measurements also coming through. In terms of in Shanghai, you can see the government has supported all the government top hospitals to spending more money than ever. I think there's a percentage you have to spending on your annual sales in terms of building up your new online procurement system and also the digital platform infrastructures. This is so obviously government has been pointing out where to go and how much money to be spending on these areas. So this is our top-down approach. More or less that there's a risks for tourism industry and also face-to-face activities going forward.
Yes.
Especially we saw the airline industry has suffered so much. I also learned that at the end of March quarter, Mr. Buffett, he sold all his banking names and U.S. banks, especially he sold out completely Goldman Sachs. He has been holding Goldman Sachs for more than 10 years and he just sold out. So this is all the risks were created by the top experts in terms of how they judge the risks going forward.
Yes, it is.
So these areas we are just giving our advice to the investment field that you have to take top-down approach and follow the head and shoulder investment names and opportunities. So there are going to be very much divergent performers in terms of all the sectors, and the healthcare will be the #1 performer, at least for 2020.
Thank you very much. Just a quick reminder to our viewers that they can submit questions for the Q&A portion of our chat. Ming-Chuan, just coming back to you on the risks that a professional investor, private equity investor in the segment, you consider when you are approaching healthcare.
Well, the risks, I think the first thing is we need original or we need disruptive innovation, not only Me Too innovation. So in China, we see a lot of Me Too innovations. That is, American did something, we follow up the similar things. So we see many similar new drugs, but we have no idea their efficacy or safety profiles because it's only to go to the clinical trials we can get the results. So as some, for example, I give you an example like the PD-1 oncology drug, PD-1 antibody. This is a very good antibody to fight against cancer cells. And globally, there are, I think, about 8 to 10 PD-1 candidates is under development or PD-1 drugs on the market. But in China, we have got 50 PD-1 in the pipeline. So, the problem is it's very difficult to recruit the patient to do the clinical trial. It's very difficult to find the PI to do the trial. You put a lot of money in, but I think it's a very high risk to get some good results because it's too much crowded in the areas. So I think in the future, China needs to find something original, find something disruptive technology to be transferred to clinical use. So I think we need some disruptive innovations. In China. And the second one is I think the collaborations between US and China with other countries. I think this is very important, especially in the pandemic. we can't protect ourselves only, figure out the things in our country. We have to, think broadly. We have to, protect all the people around the world so we can protect ourselves. So in that case, I think the collaboration between economic entities and different nations are very important, especially in some, some drugs, innovative drugs or vaccines. For example, I think it's a good gesture is between China and Canada. They have got collaboration in the vaccine development. And also we can see some, collaborations between China and the US for the Gilead product. It's an antivirus product. It's just approved in the US, and it has been done the clinical trials both in China and in US. So I think the collaboration is very important, so we can defeat the virus.
This is the time to put aside our differences and collaborate on such important areas as healthcare. Thank you. Just quickly turning to local market, Hong Kong has put so much effort into attracting biotech stars. And we've also seen recently movements by Shanghai and Shenzhen to also allow pre-revenue companies to list. Who's going to go onto the spot? Who wants to rate Hong Kong's efforts so far? How do you think that Hong Kong has done as becoming a hub for biotech entrepreneurs? Yang, you're nodding. Let's put you on the spot.
Thank you. I have been investing in a few of them, not many, because only about 100 companies are coming since Hong Kong Stock Exchange announced this new rules, the Chapter 18. I guess this is a very new area.
Yes.
As Hong Kong traditionally investors are focusing on fundamental-driven classic investment sectors like real estate, banks, and entertainment. Those gambling companies. Those are used to be the mainstream of investment themes. In the past 1 year also, I saw a new wave of investments coming through and supported by the new rules of Hong Kong Stock Exchange. Therefore, the new renovated companies under the Chapter 18 are become a new investment theme. We invest one of them yesterday up 50%, and I've been waiting for so long.
50%.
It's Maibo. It's the code is 2181. They have many antibodies themes, and new drugs are maybe coming very soon. So this is the one I invest in recently. I hold for almost a year and coming to show the result. But however, I don't believe very soon Hong Kong will become the biotech hub. You need many conditions, for this can be true. This is only 1 or 2 years trial period. Hong Kong has to play a catch up. And but more or less under the Stock Connect programs, investors had now more widely choices. You can follow the A shares. There are so many of them. You can invest all of them through the Stock Connect programs in Hong Kong. So all the Hong Kong and the China government now supporting through the secondary market, supporting the healthcare industries.
Thank you. John or Minchuan, would you like to take that? Hong Kong's success, rate it versus Shenzhen and Shanghai. More exit opportunities for you, I guess.
Yes. Actually, I focus on biotech investment, and for the past 12 years, we have done this on more than 30 companies. I mean, and I think half of them were listed in Hong Kong.
Half.
Half, yes. I think while Hong Kong is an international financial center, so if the company go to the Hong Kong stock exchange market, and it can attract international investors, and these investors can help these companies to build relationships with their Western partners. So collaboration, as I just mentioned, is very important, not only clinical trial, but also in technical collaborations, co-development, or exchange the foundation IP, or it's many things they can do. They can share their platforms. So collaboration is very important in innovations. I mean, in biotech. So I think this is a good advantage for these companies. So they can have the more collaboration opportunities, and I think also Hong Kong government pour a lot of money. I think it's about 100 billion Hong Kong dollars in the industry, in biotech industry in Hong Kong. They have got science park. They are going to construct another science park. So this can attract more biotechs go to Hong Kong to have their for example, the global center, or for example, if it's a Chinese local player, well, it's a good place to go is to go to Hong Kong and have their international hub or international center for their R&D, for their licensing, for their BD work. So I think it's very attractive because Hong Kong has a very unique legal system, and it's a very international. So, for example, we can do the IP exchange, or can licensing some products in Hong Kong and commercialize in China, or manufacturing in China. So, Hong Kong has a unique position in this field, and we have some other. We have another half coming into the market in Asia market. But I think at current stage, we can see a lot of more companies to do dual listing. I mean, in Hong Kong and also in China, dual listing. Right. For example, a company I invested in is Casino Bio. It's a vaccine company, and it went to the Hong Kong market last year, and now they passed the examination of the Chinese SEC, and so they are going to listed in Shanghai stock market. Yes, in next few months. So you can see it's very easy to do the dual listing. So you can benefit the policies, benefits the investors from both markets. And
how long was the wait, the queue for the star market?
I think maybe 1 year. Okay. But 1 year. But I think it's a speed up. So I think it's good to have footprint in Hong Kong and also have it in China.
Fantastic.
Yeah. In terms of asset allocation from the top-down approach, you need to hold both assets in terms of currency denominations. One is US dollar, one is renminbi. You have no other choices nowadays. Yeah. Especially so going forward. So if you are Chinese investors, you naturally hold all assets in renminbi. So you need Hong Kong as diversification for the Hong Kong Stock Exchange. Also, if you are already listed in US, you already are so successful, like Alibaba and Jingdong, JD, you need coming back now to have a dual listing or your second place for diversification of your wealth and also your future development, especially for capital raising purpose to serve the Chinese customers. So that's why there is a big wave, the ADRs, 中概股, they are coming back from US coming to Hong Kong. And so
we're just going to have to sort of wrap up with our final question now, as we are running out of time. But I do have a quick fire round for Q&A. Which subsector of healthcare is your top pick for 2020, and why? we'll keep it tight for just a quick round until we go to Q&A with our audiences. But yes, Yang, you
Okay.
look super clear.
Yeah, because I haven't finished my previous question.
Yes.
Anyway, medical device and
Yes.
the instrument are my topics.
Okay.
They are not only supportive so much by the government, they also providing very impressive and decent career growth.
Okay.
So these areas are more mature and less government regulatory control, and also big demand. So from the fundamental driven reason, and you have like a double-digit growth, but there are also quite a few top companies already there, and they all included in the MSCI China Free Index. So you can easily pick them up.
Got it.
And our top pick is 1066, Shandong Weigao. And Weigao, it's a $10 billion US company growing from 60 million 23 or 25 years ago. It's a top range. It's for medical device and instrument. It's already up, I think year to date, like over 50%. It's outperforming, and the PE level is 20 to 25 times. So either from the valuation point of view, giving a 25% CAGR growth, it is not very demanding in terms of this. But also from bigger trend, top-down approach, you must own this company, giving the whole public healthcare system and infrastructure to be doubled in terms of government expenditures. This company will benefit the most.
Got it. Love the conviction. 1066 medical devices. Thank you. John, can I turn to you? Which subsector do you think, from big picture, is going to do well in 2020?
I have a preference for AI-driven treatment methods that can address the doctor shortage, that can focus on some of the high misdiagnosis rates, that can improve early disease detection. These are all a natural application for AI-driven platforms, and that's where I think you will see a substantial amount of price appreciation.
Fantastic. Thank you. Min Xuan.
I focus on unmet medical needs, so I prefer to translate the breakthroughs in the science into the clinical practice and products. So I will focus on 3 areas: innovative drugs, medtech, and diagnostics.
Thank you. Yang, we've actually had some response to your question already. Your response to the medical devices area. Could you say the name of the company again that you mentioned?
Weigao, Shandong Weigao.
Got it,
its
everybody?
Code is 1066. It's in the MSCI China Free Index. It's been listing in Hong Kong from 2003. Now it's almost 30 years. 2003 years and 27 years. I think. Yeah.
Fantastic. Hope that answers the question.
17 years. Sorry, my poor mathematics. So 2003 to 2020 is 17 years.
So an established
it's
company.
a well-established worldwide name, and used to be invested by Medtronics and taking over now in terms of our market cap. In China, the largest medical device company.
Okay, take a look at that stock. We have a question from Flora Yu. Some local governments allow diabetes patients to order drugs online and get them delivered during COVID-19. How might governments roll this out in the future with public hospitals? Will public hospitals launch this themselves or partner with players like WeDoctor and Ali Health? Min Xuan, would you like to?
Yes, during the pandemic, the government in Shanghai and in some other province in Wuhan, they have got a policy to promote the online consultation and e-prescription for the chronic disease, for example, diabetic disease or hypertension. But I think this will be a trend after the pandemic, is because this common disease or chronic disease, the patients have to go to the hospital every couple weeks to get their drugs. But we can use e-monitoring their blood pressure or their glucose, so they can monitor, through the internet or through the online, monitoring devices. So they can do this, and they can do the e-prescription online. So I think this will be continue after the pandemic. And another good news is National Healthcare Security Administration also, listed this kind of online consultation and drug reimbursements in their public insurance list.
Yes,
so
that was big news.
Yes,
wasn't
big
it?
news, and this
they
will
can
promote.
now get reimbursements
Yes.
from these online platforms.
Yes.
Yes. So you expect the consumer behaviour that we saw during COVID-19 to continue afterwards because people find it more convenient.
Yes, and they can save the resources. Hospital resources, doctor resources, and can save people's time. Queuing time at the hospital.
Yeah, better for the hospital as well. Yes.
Yes, it's
So
a better offer.
win-win.
Yeah, win-win. Yes.
We observed the big hospitals, the classic 3 hospitals, the patients reducing substantially during this COVID-19 event.
Well, who wants to go to a crowded hospital?
Yes, and also, but the smaller clinic centers and disease centers, the government built up, and then the patients increased substantially. Also, we learned from SARS, 10 years ago, the SARS. In 1 year time after the event fade off, and the double digit, like between 28 to 30% increase of the patients will normally go to the hospitals. But this time I will be doubting the trend will similar to that of 2008, the SARS. Therefore, because that time we don't have VR, AR, we don't have the AI-driven technology for diagnosis distance or offline platform. But now all the technology seems to me are ready to support the digital behavior and digital solutions.
Yes,
right?
People have seen it works.
Yes. So probably government will take the experience and spending more money for the national-wide expenditure on the digital and the online platforms. That's this trend for sure will be continuing.
Got it. Thank you. We have a question from Shannon Nielsen. With the possibility of and timeline of a vaccine unknown, what opportunities do you see for other innovation or treatment for keeping people healthy as possible? Do you see fitness, wearables, etc., playing a stronger collaboration with healthcare? What other opportunities are there?
I think it's very sad. Giving all the money so much money has been spending by the government and from the government to find the vaccines and talk about the vaccines. We don't know the timeline yet, and we have to rely on all the doctors. The doctor one knows better, and all the technologies for the vaccine to be created. I think the government's speeding up this. On the other side, I think for well-being, human health, you can use many other things for alternatives. For instance, we learned during this time if the fitness are closed. So what do you do?
All the gyms are shut.
Yes. So what do you do for keep your health going? And it's running. So we learned the running equipment sold the most. You can run at home, right? So and also in the natural environment. But I don't believe that the indoor activities will be resuming as normal anymore. Because as I shared, the isolation behavior will be dominating our social activities going forward. At least we reduce a lot of time go to supermarket,
Yes.
go to shopping malls, go to cinemas, and all the cinema shut down, you know, and I don't think the public gathering event will be as normal as it's before.
Life will become much more
Exactly.
digital, online. We will live online. It's do we have another question from our audience? From Raymond Wu. With the Sino-US relationship having some difficulties, do you think potential listing candidates in China in the medical sector would find it more difficult to fund their operations going forward? Yes, so capital raising, is that going to be tougher going in the midst of the US-China trade war?
That's a good question. I suspect that there is sufficient liquidity at the domestic level to support capital raising activities of a certain number of IPO listings. But I think inevitably there will be a negative consequence to China and Hong Kong of this deteriorating set of relations, and we saw that yesterday and the day before yesterday when TSMC was denied the opportunity to work with Huawei. And of course that's going to have a substantial impact on the ability of China to actually advance technologically. So personally I think this deteriorating relationship between the two powers is going to cause a setback for China.
Yes.
That might last quite a few years. It's going to retard and decelerate their ability to meaningfully maintain a competitive technological relationship with the United States. Will that impact liquidity? I think it's going to start impacting capital flows. Absolutely. We're already seeing that, of course, happening right now. I think there's going to be an increased acceleration of delisting from the United States and relisting essentially here in Hong Kong and then China. I think that trend is going to accelerate. It's worth pointing out that Hong Kong right now still has a massive amount of liquidity in relative terms. The Hang Seng has a market cap of around 5 trillion US dollars equivalent, and China and Singapore, for example, 1 trillion. So 5 times larger in many respects. So I still think that Hong Kong's attraction as a financial hub remains in place, but one can't help but fear that incrementally these advantages are going to diminish and suffer as the relationship between the two countries erodes.
Yes, I agree. Thank you. Thank you for your thoughts. Well, that brings us to the end of our discussion here. So it just remains for me to say thank you to our audience for joining us, and for our panelists for their thoughts and insights. If you'd like to see more webinars concerning the state of the economy, join our next webinar in this series, Is COVID-19 a Geopolitical Game Changer? And that will be airing on June the 2nd. So, and of course, we would like to thank again our sponsor Credit Suisse for supporting this series. Everyone, stay safe and well. Thank you and goodbye.